Powell spoke at Jackson Hole and the markets tanked. The two things are definitely related. However, the technical analysis has been looking pretty bearish. In Capivision last week, I explained why I think the markets could make a steep and prolonged turn to the downside. And today, we got the signal that I've been alluding to for a while. Earlier this week, I said that we might not know really what's going on. We might need to wait a little while, and we definitely got that signal today. And so moving into next week, I'm going to be watching the charts very, very carefully, and I need to actually go back and revise some analysis that I had in the short term. I did show a motive wave yesterday in SPY going higher, and I was looking for a little measured move up before a longer spill down, but it looks like we're just going to go for a longer spill down. I did forecast a drop for today, and we did see that. We did reach the 413 level I was expecting, and then we also saw the 408 level that I was expecting earlier this week. And now, the analysis starts to get really interesting. So let's hop into the charts. The market overview, SPY top left, Dixie, the dollar strength index top right, the 10-year treasury yield bottom left, and GLD, which is a gold ETF. It's supposed to reflect the price of gold or perform with the price of gold. On bottom right. So here we go. Let's start with SPY. That is a huge red candle. Huge red candle. It's hard to misinterpret what that is. It's got to be the most bearish candle of all candles. It's not only red, but it starts and just drops. There's hardly any wick at the top or any tail at the bottom. This to me is a Marubozu long black day, and it is confirming a trend reversal in SPY. Now we have a lower low here, and so we can draw a trend line and just connect the highs. And as long as we don't overwrite the price, this is our new downtrend. And so to see this new downtrend forming below this other existing downtrend tells me that, yes, we're going in, and we're going down, and we're going down. Yesterday, I thought we might be in a small measured move up, in which case we would see a test of this upward trend. And I gotta correct that. I think I saw what a lot of the bulls saw there, and it was a bull trap. However, I did expect a drop today, at least to 413, and we got that. Earlier this week, I was expecting a drop to 408. We got that today too. And now we're confirming this trend reversal with a clean 1, 2, and 3 push down, this close being below this level of support, and that's all there is to it. SPY's looking bearish. TNX in a rising wedge and now testing the bottom trend line there of that pattern. Again, this is bond buying. This is the market buying bonds, looking for certainty. This looks like a safe haven asset to me, and people might be moving to it. Same thing with the dollar. The dollar is also a flight to safety kind of a deal. So if the dollar got bought today, that makes sense. And this is a massive hammer. We're going to need a confirmation close above or below this candlestick pattern, though, in order to analyze it and to trade with it. That is the key to candlestick pattern analysis, is confirmation closes. And trade does not do that. And it's annoying because he's giving these terrible analyses. And yeah, I'll say that. Okay, so really, let's find which of these candles in the last week have actually been confirmed. So we had a big green candle, right, with the close up here towards the top of this trading range, and we haven't seen a close up there yet. So that candle is not confirmed. This candle doesn't mean much, but we also haven't seen a close below its range, right? Its tail being down here. So look at this. None of these candles have really confirmed. You can't use any of these candles for your pattern analysis. You can't. Which also means that you can't use these three soldiers here either, because we have to get a close above that level. But if we do get a close above those levels, then it's like, woo, the dollar's going to go super high, and that'll bode poorly for gold. It will probably bode poorly for gold. And that sucks, but I think that we're seeing a top here, and we're probably going to see a bounce down and a push it down in the dollar. But again, it could not play out that way. The dollar is kind of the wild card for me right now. I'm not totally certain what to do about the dollar strength. Moving on from that, though, GLD, moving down with the markets, it often does correlate with equities. And today, I think the big news is that it stopped following equities and it found support on an old downtrend. and it's still above the low of this day right here, which means we could still be looking at our ABC corrective pattern pushing higher, and this next move up to C could still be pretty strong. I'm still looking for that until we get a bearish push down. I think gold might go up next week as the markets continue down. Who knows what dollar's going to do, but I expect yields also to make this breakout. So I'll go into that into Capvision a lot. If you aren't subscribed to Capvision, get into Capvision. I do a 45 minutes, it's about 45 minutes usually. I do a long video on Sundays, and I go into SPX a lot of elliott wave analysis. I've done a lot of AMC analysis there too. If you want to support the channel, sign up. If you want access to the private booth in the Discord server, sign up. This is some awesome stuff I'm doing. I really appreciate your support. The community is amazing. You guys have always kept me going, and you still continue to do so. Thank you. Let's move on. AMC and APE, neither of which is looking bullish. On Twitter, I went and I just like announced, hey, look, a bear flag. And then look, we're breaking out. Now we've had that 1, 2, 3 trend reversal, a little push higher. I think that we're looking at, we're going in for minute wave 5. And what? Whoa, that's not a 5. What are you doing, Cap? Get rid of that. Okay, well, okay. Here's the thing is, you're supposed to put the circle around these numbers, but I can't do that in these text tools on TD Ameritrade, so I end up just putting the little circle before the numbers. It doesn't matter, I guess. Regardless, I think what we've seen is mini wet waves 1 and 2 come in, and as frost and pressure into direct, it's just useful to start thinking that the third wave is going to extend. So on our way down to 5, I'm looking for wave 3, and I think that we've seen the first 2 subminuets of that wave, and we're looking for that third subminuet wave. It's gonna be big. It could be big, and yeah, basically no bounce, not yet. I thought there would be. I said I don't know when though, and guess what? It's not yet. And APE doesn't look any better. So I think I have a small correction on APE, and it is that 1 and that 2 should be labeled A and B, and the next dip should be labeled C until we get a new low, and then we'll go back and we'll label these as motive waves. But until then, you know, it's a little preemptive to be calling it labeling it in motive mode, when I should be labeling it in corrective mode. The difference being on the letters versus the numbers, and how many waves in each count, and the thresholds for which each count is invalidated. And it is important. The devil's in the details here. I wanted to show SPY. There is a correction here. That is the rising wedge. I thought I saw a motive wave through here, and that made sense because there's a nice little channel. I was expecting a drop today down to one of these retracement levels. Well, we hit 2 levels, of course. I did want to see this one today, and this one I wanted to see earlier this week. Well, we got both of them now. So this is telling me that, yeah, we probably just finished up a mini wet wave 2, and we're now starting wave 3, which is, guess what? It's the big one. It's the big one, and maybe I need to revise the count I shared on the daily time frame. I'll go all into that in Capvision, so stay tuned for that. I think that's where I want to stop today. Just bearishness everywhere, and honestly, I think it's going to continue. So buckle up, know where your stops are, and good luck, because I think what follows will shake out most of the retail traders. Stay safe. Happy trading.